Welcome to this next video. Please adjust this microphone. Sorry for the noise. Right. Next topic, assets. I'm not going to go through everything now. There's asset maintenance as well, those types of things. But I'd like to share with you what I'm going to do with assets. And once again, if anybody is listening for the first time, I'm not an ERPNext boffin. I just want to use it with a little company that I'm starting. And as I find things, I share it with whoever wants to listen. Then, of course, you can make your own deductions and apply it in your own setup and scenario. What I'd like to emphasize in this video about assets is the one part which I'm going to do, which is a little bit more traditional. But then there's something which I'm going to do which is not very traditional. So you need to look at this very critically and say, yes, you're also going to do something like this, which I doubt, but I just decided I'm going to do it. It's not really correct, but what it does highlight is, how you can configure ERPNext to suit you. And that's certainly what I did. It's just to use what I've got and twist it a little bit until it suits me. Right, what's the problem here? I've got assets which are the more traditional assets, HP laser printer, computers, that type of stuff, all depreciation types of thing. Then you've got assets that are these lin bins. Got a frog in my throat, which, you don't want to depreciate a 20 Rand lin bin over a period of 5 years. Well, maybe you do, but I certainly don't. And there's 80 of them. You've got to make an entry for each and every single one of them. I really don't feel like doing that. It's a lot of effort for nothing. Besides, a computer and a printer, their value certainly depreciates because after 5 or 8 or 10 years, they are non-serviceable. But a lin bin, a plastic lin bin where you store your stock items in, plus the panel that you use to mount it against the wall, in 5 or 10 years, it still has a value. Doesn't matter how you look at it. So I'd like to make this distinction. Right, so initially, very initially, right, let me move my mouse, otherwise you look at a screen that nothing happens. Initially, I actually thought of doing all my fixed assets like this. So there's a warehouse called fixed assets and everything gets put in there. I can actually determine the value of my fixed assets by simply drawing a report on the fixed assets warehouse. But then I realized, there are depreciation and stuff like that for certain items. So instead of having everything in there, I'm decided to keep some of the stuff in there, which is like almost a warehouse, which is a fictitious concept within the frame reference of fixed assets, but let's stick with that. But you can't handle that depreciation within that type of setup. So I said, okay, well, instead of choosing one or the other one, why don't we use both? Now, the one problem with using fixed assets, once again, is one, you can't apply depreciation, and two, something which I noticed while I was trying to do this, because now if you try and assign all your fixed assets, printers, computers, everything, to a warehouse, then when you do your purchase invoice, here's a draft. I've been playing around just before I made this video. You've got to select an account head for this. There. And doesn't matter what you set here. If you have perpetual inventory enabled, if you save it, it'll switch back to a stock account. Which one? Let's look at chart of accounts. Under stock, where's my fixed assets? No, sorry, under current assets. There's my stock assets. It'll switch to stock in hand. Finished. Doesn't matter what you do. If you want to use something else, you'll have to disable perpetual inventory. Where do you do that? Under settings, you go to company and you select your particular company. I've only got one, you can have more than one. And here you've got a setting which says enable perpetual inventory. Now, perpetual inventory allows ERPNext to manage your inventory automatically, and that's what I want. You can actually disable it, but then you've got to, at the end of a certain period, a month or 3 months or 6 months, you've got to go and manually do your inventory control. And I didn't think that was so romantic, so I thought, well, let's find another way. I want to keep this enabled. So you can only use different expense heads if this is disabled. If you have got this enabled, it'll always revert back to a stock account. All right. So I thought, okay, well, there's a workaround to this. If we go to accounting, now generally as default, you only have that account. I created all these accounts, including this fixed asset. Forget about those for the moment. Well, actually, they're rather important in a certain way. I'll show you just now. But I'm going to focus on this. I created this, and I created it as a stock account. Account number 1460, that's really not important. But it is a stock account, all right? And as such, when you do the purchase invoice, it should present you, or you can, where's my item now? This is on the previous purchase invoice. I'll do another one just now. On the account head, you can now select here. Well, it allows this to be set. Sorry, let me rather put it this way. To what does it set that? Good question. Now, funny enough, when you actually do this purchase invoice, you can't directly set it. I'll show you just now. But it does choose it automatically. What account does it use? It does the following. If you set up your warehouses, now it works for all of these. I'll show you just now. For fixed assets, you say it's a fixed asset warehouse, and the account is fixed assets. Right now, that's the account I created. And similarly for all your other warehouses, work in progress, you've got a work in progress 14440. You can see it's in the same range. It's all stock accounts. And if you go and so you can carry on all of these. If you go and look at those stock accounts, all of them, stock in hand, it's a type stock account. Let's just choose a tree value. Fixed asset, I've defined that as a stock account. All right, so my warehouse, you go to warehouse again just quickly, fixed assets. The account linked to this is fixed assets, and that's the account it will drop in there. And the expense head of the purchase that you do, that you stipulate it to be a fixed asset. All right, so let's run through that. So I want to do another purchase invoice similar to this one. I was just practicing that. Let's say new. I'm buying these things from. Did I spell correctly? No, that's not correct. Plastic land. There we go. Eventually. All right. So I want to update my stock. All right. Oh, maybe I should just go back again quickly and just show you what I've done is the item is defined as a stock item, normally maintain stock. All right, this should really be unticked. That won't make too much of a difference now. And the default warehouse, I should actually set that up here as fixed assets. Fixed assets. There's your default cost center. Default expense head is, yeah, let's not set that now. All right, and then while we're busy, we can just take that off. All right. So important that we actually choose that to belong in fixed assets. So if we now go back to our purchase invoice, plastic land, we want to update the stock and we want to buy this unit, one of, it remembers this. I've been practicing before the video and that's the price I used. It's not really the price, it's much more expensive. So let's fill this in. I want one, that's the price. Let's keep it the same as that. It must go into fixed assets. All right, and now it says cost of goods sold. All right, and you can take this off. And if you, for instance, say office equipment for now, all right, and you save it, all right, it actually says, oh, I've got perpetual stock enabled. I can't use any expense account. Use the default expense account. And unless you stipulate a default expense account for that particular warehouse, it'll take the global default, which would be stock in hand. But now it actually assigns that fixed asset stock account to your expense head. All right. I hope it makes sense that I didn't talk too quickly. Let's just double check if I filled in, go to the top, filled in everything here. I want to update the stock. Is the stock, is the warehouse filled in correctly? I think it is. Yes, it is. Yeah, I'm not going to do the VAT thing, or maybe we should do the VAT thing. Let's change that. Once again, I've got different VAT account. And the reason for that is I'm not VAT registered. And there's a video about this. You can go and look at it. I just created my own VAT account under direct expenses so that I can keep track of these costs. Because if you're VAT registered, it's money in and out. It doesn't actually reflect on your financial statements because it's money in and out. For now, I'm not VAT registered. I want that money to be registered, so I created my own account. That's all. The rate must be 15%. There we go. That's it. So we've got our VAT. It adds 18 Rand. We left with 139. I think that's it. Let's have a look. Yeah, that seems to be it. So we say save and we submit that. Right, let's quickly do a payment. Oh dear. Cost center, purchase invoice. I thought I did. Oh, hang on. This is the VAT. Oh, there's the cost center. Okay. That should work now. There we go. So I left out my cost center, just remember that. All right, so I've got my purchase invoice. It's unpaid. Let's quickly generate a payment. I don't want to stretch out this video too long. We've done this in previous videos, so I'm just going to rush through this. I want to pay by cash. Yeah. Just have a reference here, cash 1, and the date 1st of November. We create a payment and we submit that. Right, okay. So now I've purchased that. All right, let's have a look at our stock balance. And we want to look at fixed assets, generate report. And I now have my Louvre panel, all right, in that warehouse. Okay, it's not really in the warehouse, but that's how I want to manage this. Let's look at the accounting. Just want to log out and log in, because there's sometimes background processes that, oh dear, you force when you log out and in again. There we go. All right, so if I go to accounting and I go to general ledger, right, refresh, right, there's everything now. All right, so here's my purchase invoice. No, there's my purchase invoice. I purchased the panel, right, so it's against my creditors. I pay that. There's the payment entry. I'm not going to draw the T-charts like I did in the previous video. If you guys want, I can do that. But it's just this few transactions. It's quite simple to follow. So here's the payment, obviously a debit to match that credit on my creditors because I'm paying off my creditors. Now it's a loss for my cash account, so it's the credit on the cash account. So that matches that. And then the actual panel is a debit for my fixed assets. All right. But now the actual value is only 121. The VAT is not really a value. All right. So we need another debit somewhere, and that's on the VAT. So you see that plus that will give you 139. That's why everything balances debits and credits. All right, so what's happened here? The cost for the panel is under fixed assets. I've got a track of that. Once again, it's not quite ideal, it's not standard, but at least I've got a track of the cost, and I've got it listed in a separate warehouse facility away from my. I've essentially kept this away from my stock that I'm going to use for building a drone. This was the aim, is to keep it away from stock in hand. It's not under stock in hand. All right, it will be listed on your balance sheet under stock, but there'll be an entry to say fixed assets, so it'll be clear to everybody that reads that. Okay, so but now you want to buy a real piece of asset. Now, there's a few things you need to set up beforehand. One of them being a location. Okay, the location list. You'll see it when I enter this. Now, when I clear the company information, this didn't clear. All you just enter is your location data. You create a location, and there's something else that I need to create. Oh, an asset category, right. I want to buy an HP laser printer. I'm going to classify it as office equipment. All right. Somebody else might fist fight me and say, well, that's electronic equipment. That's fine, as long as you stick to your own rules. So I've created this asset category called office equipment. Now, here you define your finance book, your depreciation method, how many depreciation periods and the frequency. I'm not going to go into depreciation in this video. There are some videos about it. If maybe I'll make a separate one for this, but I want to just emphasize the difference between the two ways of handling assets. All right. Now this probably was deleted because it's Trinity Drones information. The fixed asset account is, oops, let me just scroll up. It comes under office equipment. All right. The accumulated depreciation account is already preset. Depreciation is expense account. There's a depreciation account set up by default. And your capital work in progress account is also set up by default. All right. I don't think there's anything else that needs to be set up here. All right. So this is where you set up the depreciation profile if you want for office equipment. All right, you follow straight line method, etc. I'm not going to go into the detail of this, maybe a little bit later. All right, so I've now saved that, and now I can actually go and buy my asset. All right. Oh, before we go any further, let me just show you the item list. I have an HP under fixed assets. There we go. How did I set that up? I set it up as not a stock item. It's a fixed asset. It's not used in manufacturing. What's the asset category is office equipment. Right, so you set this item up slightly different. All right. Also notice that I'm using a different code for this. SKU codes are for nuts and bolts and stuff I use for drones. SKU, stock keeping unit. For general expenses, I decided to go for GEX, general expenses. And for fixed assets, I said FAS. And my HP laser printer is the first one. I'll probably go into a categorized one where 10,000 is something and 20,000 is and split it up like that. There's herds of stuff on the internet about how to create your own SKU numbers. I'm differentiating by number. 10,000 and up is something, 20,000 and up is something, 30,000 and up is something. All right, so I just chose one. It's office equipment. I created a barcode. And because it's not going into a warehouse, I don't set that up. Now, purchase replenishing detail. This is where you do stock control. It's not relevant, so I didn't fill that in. All right, so that's how I configured the item called HP laser printer, which I'm now going to buy. I'm going to create a purchase invoice, new one, and we're going to buy it from, let's say, Micro. That's not how you spell micro. That's not how you spell micro either. Please bear with me. Micro robotics, supply invoice detail, blah, blah, blah. Date 1st of November. We're not updating stock because it's not stock. We are buying an HP printer. There we go. One, you'll notice it remembers the previous price. Let's just see if I'm filling this in correctly. There's the price. And here's the expense head, office equipment. Now remember, I actually defined this as a default expense account. I can change it now if I want to, but it auto fills it in. I want this to be under office equipment. So that's where it will be listed. I'm happy with that. Let's save this. And we submit it. A bit fast there. All right, so it's unpaid. Let's pay it quickly. Let's not waste too much time on this. I've done this on a previous video. Let's pay this cash. Blah, blah, blah. Let's just have some reference here. Cash 2 and today's date, which is November. Save that payment and we submit it. Right, I've made a payment. So my purchase invoices are paid. Right. Now, we need to create an asset item for that. But before that, I just want to show you the general ledger account. Right. Let's refresh this lot. Now it's starting to getting a little bit busy, but I'm sure we can handle this. This is where we did the purchase of the panel, the first one. We paid it. Okay, and it is listed under fixed asset account. And that 139 is made up of 121 together with the 1815. There's my VAT. Oh, I didn't add VAT for this last transaction. Anyway, it doesn't matter. Right, next transaction. Here's the purchase invoice. I'm purchasing an HP printer. It goes to creditors, and you'll notice further on the actual part here is plastic, land, and micro robotics. There it lists that. All right. I'm making the purchase. I'm paying it from cash, so my cash account gets credited, and it debits the creditor's account, so that balances out. So my creditor's account is paid. The balance for my creditor's account is 0. And that now gets listed because that balances that. We need a debit entry on our office equipment. So our office equipment is debited by a value of 3,500 Rand. All right, so the big real assets gets listed under the 17 account numbers, 1700, and the smaller ones gets listed under fixed assets, which is also listed in the warehouse. And once again, I say this is not really correct. If I get audited at some stage, I'll probably get wrapped across the fingers, but that's how I choose to do it for the moment. All right, this is actually the right way. Yeah, that's about it for general ledger. What now remains is for you to actually create an asset entry. And I now have, right, lots of things here. Asset, HP, HP laser printer, item code, FAS. You see here we need the location. That's why you created that. Purchase invoice is, it was this one, I think it is. All right. Yeah, it was the correct one, 3,500. Available for use date. This is just a date, like for instance, if you buy a car, there's costs involved, but you can only get it in 2 weeks' time. That's why there's this, in the case of a printer, well, I suppose unless a printer gets delivered later on, it's going to be the same date. Right there, you can choose whether you've got a maintenance required. Now, of course, the depreciation is already set up or configured on office type of equipment. So let's save this and we submit it. All right. So that's how I choose to do my 2 types of assets. And of course, I wonder how that's going to work. I didn't actually set the date at which the depreciation starts at tomorrow. Then I can run that through. So anyway, as the depreciation starts kicking in, I may add, let's have a look here, asset, it's set up for the 2nd. Right. All right, so that's what I can record for the moment. That depreciation will kick in, and I think I'll make an amendment once it starts kicking in tomorrow as to what happens to the accounts with the depreciation. That's what I want to show you for the moment. Hope that helps somewhat in helping you to decide what you want to do with your assets.